All right, Diego, I just want to, this is a follow-up to the email I sent you regarding uh, social media stocks looking ready to get even weaker. And so what I want to just show you is the process. Again, this is something that uh, I envisioned for a short-term, you know, a client short-term account, if you will, and I think again, you get more than one client into something like this, it probably makes the most sense to fold, to put it, into a hedge fund type situation. But right now, I know you only have that one client. You could do a managed account. It's real simple. And the key, though, is having the ability to automate this strategy, the short-term strategy, at least intraday. Uh, with the rules, some of the rules that I've developed, and it just makes things uh, a lot easier and easier to manage. And anyway, without further ado, so what I have here is basically a radar screen, which you are familiar with now using TradeStation, and I have some scanning features. In this case, yesterday, uh, what scanned up, and I've been following this. This isn't just from yesterday, but it just became apparent to me. Stocks like Facebook. If you compare Facebook to here's a daily chart of Facebook to the S&P or the Nasdaq, you see Facebook's very relatively weak, and yeah. So the big thing, and you can see it right here. See all this red? This is versus the S&P 500. Everything red down here, it means that it's relatively weak, and green would means relatively strong. But you can see it's been red for quite some time now, and I was looking to be shorting it. It's right in here. Today it broke below. It was, and I'll show you on the intraday basis what happened. It was Facebook, out of all the stocks I had shown you, was one of the actually quite strong. It seemed like it was looking to at one point I figured, hey, maybe we want to reverse, but here we go. I'm just going to, here, look at this trend line going way back to uh, uh, June of 2013, and look where it takes us right to where we are right now, right? So this is in danger right now of breaking down and getting potentially much weaker. At least I envision it going back to the 70 level, and maybe even retracing somewhat lower, but we shall see how that develops. We'll just take it one day at a time. So I'm going to switch over now to the intraday and show you how my automated strategy traded Facebook. So you know like this right here, these, this would be a day, this is a day, this is a full day, so this is the divisions of the days. Each bar represents a long-term tick bar intraday, and as you can see, it didn't really perform that great right off the bat. In fact, when Facebook did break below that 73.5, that was pretty much the low. So I got short in here, and then had to cover up in here. But Facebook did get weak again, and then it turned right back around and shorted it automatically. I didn't have to do anything. It automatically shorted it as it came back below, and as you can see, it didn't close on its lows, but definitely closed below the 73.5 level, which should be significant. And the key is tomorrow to see how this reacts. Because at some point here, relatively shortly, this should be sustained below the 73.5 level, and then if you're short, that's the level you're holding against. But the nice thing about this strategy as well is it will then monitor the trade and not let a profit get away from you. So this is how it, and again, it's highly likely that if you even take your own account, that in the long-term portfolio you're actually long Facebook. So, and again, like we talked about, the short-term portfolio should be a portfolio that is a hedge when the market, when your stocks are going in your long-term portfolio going against you. Ideally, it's going to perform counter of what your long-term portfolio is doing. And then when things are going, when your long-term portfolio is doing well and stocks are rising, you want the short-term account to actually leverage that beta and do, and allow you to do even better. This is just an example right now in Facebook. The real winner today was Netflix, and so you see what happened to Netflix. It got absolutely crushed. And the funny thing is, the level I had to sell was actually way down in here. And in hindsight, I think the key level, because this has been relatively weak now for a while as well, was especially since it was green on the open, was yesterday's low, or even yesterday when it went from green to red, was the ideal level to sell. But again, 2020 hindsight, yeah, it is what it is. But you know what? That's part of what we have. Our short-term strategy, our intraday strategy. All I had to do was load it up last night and let it run by itself. And it's shorted down here. It did have a little bit of a short-term spike. Didn't get you out. You stayed in it. Actually, pyramided, sold some more, and then the rest is history. This thing closed on the dead lows pretty much, and we'll see how tomorrow. I believe I have a Fibonacci target of 350 something, and it's closed at 360. So as it gets close to its target or reaches its target, this strategy now will tighten the reins a little bit and be potentially quicker to take a profit, take some money off the table. So again, this is a nice move. And again, if this is a very popular stock, as you know, and you may have clients who are long this, and it's nice then in a short-term account to have a hedge and be able to counter the down, the drawdown they will get in their long-term portfolio by actually playing these shorter-term moves. Another stock that's been relatively weak is Yelp. It's in the same sort of space as Facebook and Twitter, and this thing too has had crappy earnings. It's been sort of trading down on here, and the level was 57. Again, it broke, and it actually closed on its lows as well. And as you can tell here, the strategy actually leveraged the initial short sale, actually sold some more, and now we'll see how things go tomorrow, and it'll monitor the trade. And again, in a way, this is really sort of like a hedge fund type strategy, something that you'd have the ability to offer your clients, and again, be more short-term focused to basically hedge any long-term accounts. And if you think that all I do, is short, like I said, on the inverse side is when you have a move like Apple. This is where and I went over this trade already, but same thing. This is it bought in here, sold for a quick, not even much of a loss, kind of scratched, bought it back, and that was the run. And nice run, took some money off the table when it hit the Fibonacci target, but right now he's still long core position, even many days later, as Apple continues to outperform on the long side. So the short-term strategy would have take advantage of shorting, and it will also take advantage of setups like this and get long. So again, if the client is long Apple in his long-term account, and Apple makes a nice move higher, has a nice setup, he's actually going to leverage his gains in Apple through the short-term account. So it's sort of the best of both worlds. Anyway, I just wanted to show this to you. I know we talked about it at length before, but just sort of put it on a video for you. And anyway, that's all I got.